onto the markets. Well, always good news today. The markets are up, blah, 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 blah. You know, I went on and on, you know, about the today's CNBC headline. S&P 500 sets fresh record as stocks rally into the close. They just went up a little bit. All right. So what is like the S&P up to like 4%? Or how much is gold up this year? Oh, it's only up almost about 12%. Oh, it just closed today, $5 from its high. No, we're not going to report that. We're not going to talk about that. Gold is blacklisted from the media, the business media, because it tells you how bad things are.
In today's news recap, JP Morgan says central bank buying will drive gold to all-time highs. JP Morgan strategists expect gold prices to move towards $3,000 per ounce in 2025. JP Morgan strategists say there are multiple macro scenarios that will likely push gold prices higher in 2025. But after a 30% rally in 2024, some investors are skeptical about where demand will come from with prices at all-time highs. The key will be from central bank buying and gold exchange traded funds inflows, according to JP Morgan's head of base and precious metal strategy, Gregory Shearer. Central banks aren't done with gold yet, with added political uncertainty likely helping to stoke a revival into 2025, he said in a recent note. According to data from the World Gold Council, after dropping in the third quarter of 2024, central bank gold purchases accelerated towards the end of the year, adding 333 tons, 54% higher than the prior year. The People's Bank of China, PBOC, also returned to gold purchases in November for the first time since April earlier that year. Shearer said, with the PBOC buying again and the potential for China's currency to be further devalued with the risk of tariffs, we think gold owning appetite among Chinese consumers could receive a boost too, as investors turn to gold as a real asset store of value. JP Morgan strategists say there are two potential macro scenarios that will likely both be positive for gold prices, but for different reasons. Under a disruptive path scenario, increased tariffs, trade tensions, stronger inflation, budget deficit expansion, and increased economic growth risks will fuel gold buying as a debasement hedge. In this scenario, central bank gold purchases will likely remain robust as markets experience higher yields, a stronger U.S. dollar, and higher gold prices. Whereas under a Fed-focused path scenario, even if trade tensions are contained and inflation remains under control, JP Morgan said the focus will shift to the Fed's easing cycle. This scenario also skews bullish gold in a much more traditional way, given gold's characteristic bullish skew versus falling real yields over a Fed cutting cycle, the note said. In either case, both scenarios will all help push gold prices towards JP Morgan's forecast of $2,950 per ounce by the fourth quarter of 2025. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
We have entered a new economic cycle, the likes of which we have not seen in recent history, that has taken center stage, that agrees with our trend forecasts, that in these times of the trump card and the wild card being dealt, it is time to play the gold card. Again, we are the only magazine in the world that called the golden year for gold last year. It went up 24%. And in just this year, it's up almost 12%. This is serious. And Bitcoin, you know, Bitcoin's hanging around now, what? When I just looked, it was around 95K. It was almost up to 110. but it's still high. And remember, when Trump came in, it boosted right the debt state went to like 75,000, and from 75,000 up to 110,000. And that's because the crypto club is in there. But this is very important. Again, we're bullish on Bitcoin, as subscribers know, because I've been at this for 45 years and never seen a trip like this. So going back to gold, going back to where things are going back to Bitcoin, I kept saying Bitcoin and crypto's high prices, if that wasn't there, gold prices would be rising much, much faster and higher. And now Bitcoin's not catching up. This is important. The world is seeing the difference here. And the difference is this. We're into very, very difficult times ahead. Nobody knows how this game's going to play out. So, on the positive end, great what Trump is doing, ending the Ukraine war. Terrific. And as I said, if he was president, this war would not have gone on the way it is.
In today's news recap, Chinese banks launch gold repurchase programs amid plunging prices. Several Chinese banks have started gold repurchase programs amid plummeting prices of the precious metal and increased liquidation demand from investors. This month, nearly 10 banks, including the Agricultural Bank of China, Industrial and Commercial Bank of China, China Construction Bank, Postal Savings Bank, and Ping An Bank, have launched or promoted gold repurchase businesses based on Yikai's incomplete statistics. Some investors told Yikai that banks informed them they could sell their gold products to designated bank outlets, but appointments need to be made online with at least a week's notice. Gold prices have been volatile this year after rising for 7 straight weeks and hitting a record high. Spot gold and COMEX gold futures both fell below the $2,900 per ounce mark last week. On February 14, COMEX gold futures dropped 1.76%, the biggest one-day decline since the latest rally, and spot gold in London fell by 1.66%. The industry is divided on the trend. Some institutions forecast large-scale price fluctuations to come, while others believe that the bull market of the safe haven asset will continue. A staff member of a large state-owned bank in Shenzhen told Yikai that investors need to book online to resell gold to the lender. Appointments have so far been scheduled until the end of March, but the bank will inform its customers if the situation changes. Lenders could use some more stock since some banks have sold out gold bars during the market rally. For example, ICBC's Ruyi gold bars were out of stock as of February 15, and at present, the Zhumeng China gold bar products in 20 grams and 100 grams are sold out. However, investors can still buy 50 gram and 200 gram products. Before we show you more clips, smash the subscribe button and check out our huge discount on NordVPN, the fastest and most reliable VPN on the market. This VPN service is a perfect fit for smart stackers who want their privacy protected and don't want their data compromised by prying eyes. For less than the price of a cup of coffee, secure your internet access and get 3 free months with our promo. Believe me, the only problem you'll ever have is that you didn't get it 6 months ago. Let's get back into the episode.
The credit card debt going up, all the other debt going up around the world, and what are they going to do? By the way, there's the word coming out from a number of people, Rickards being one of them, that they're going to escalate the price of gold. They're going to see what's in the gold reserve. Maybe we don't have anything in Fort Knox. That's a great one that Musk is doing. Why can't we, the people, see what's in there? I'll tell you a quick story about gold. My father, may he rest in peace, I was a kid, like about 17 years old. And he told me this story about my grandfather. May he rest in peace. My grandfather's a proud American. He was one of the first to go to the polls to vote. He was so proud to be an American coming from Italy. And a real tough guy. Yeah. The mafia tried to steal his wine. When he made it, he got it back. That's the family I come from. He goes over to my grandfather's house. My grandfather's packing up gold. My father said, what are you doing with the gold? He said, President Roosevelt wants us to return the gold, and we're returning. I'm returning it. Don't be stupid, my father. Don't give him back the gold. That's a lot of crap. And my grandfather yelled at my father and gave him back the gold. I forgot what gold prices were back then, so this isn't accurate, but it's around this number. It was selling for around $26 an ounce. As soon as they got it all back from the people, they raised the price of gold to like $33 an ounce. Now, you could say $6 or $7 wasn't a lot of money. Yes, it was. I have a newspaper, and I'll show it to you. I keep forgetting that somebody gave me from 1939. The building I'm at is called the Mohegan Market. It was an old vegetable store. And there's an ad in the newspaper from 1939. Lemon meringue pie, family size, 15 cents, or 2 for 29. 2 for 29 cents. A penny difference. A penny was worth a lot of dollars back then. You got it? So when they rose the price of gold, they probably brought it up in today's equivalent of a couple of $100. They may raise the price of gold to bring down the deficit, saying we have this money and we're bringing down our deficit. So I am very, very bullish on gold. We do not give financial advice. With trend forecasters.
What's your take on Celente's new outlook? Do you think $3,000 gold is realistic this month, or are there more hurdles ahead? Will central banks continue to gobble up all the gold? It's funny that Gerald Celente has shifted his forecast after being bearish for like 2 weeks, becoming bullish on gold as he sees current market conditions driving prices higher. Share your thoughts and price predictions in the comments. Let's see how this plays out in the coming weeks. Now, watch this video right here because it's a perfect fit for you, and I'll see you on the other side.